Silver got destroyed. Not slowly, not naturally. $1.50 wiped out in 47 minutes flat, at 3 in the morning, while you were asleep in your bed. And CNBC, Bloomberg, the so-called experts? Weak demand, they said. China's fault, they claimed. Just a technical correction, they promised. They lied to your face. This was not a correction. It was an execution. Coordinated, surgical, precise, deliberate. And I have the receipts. This is MoneyMind Hub Pro, February 13th, 2026. The day you learn exactly who crashed silver and why. Names, playbook, proof. Everything you suspected about this rigged market, you were right. If you stack silver and watch this drop, the next 10 minutes will either terrify you or make you buy more. There's no middle ground anymore. Let me show you the deal they are desperate to hide. 72 hours ago, a deal was made behind closed doors. A deal that explains exactly why silver bled out overnight. The CFTC just released data that should make your blood boil. 60,000 new short contracts. In 1 week, 60,000 bets that silver will fall. That is not normal hedging. That is not risk management. That is warfare. But here is where the lie falls apart. While they dumped paper shorts, 4 million ounces of real silver vanished from COMEX vaults. Gone. Delivered to someone. Think about what that means. They are shorting a commodity they do not have. They are selling promises they cannot deliver. Do you understand what this means? The same banks that paid hundreds of millions in fines for manipulating silver? They are doing it again, right now, in front of everyone. JP Morgan, HSBC, the same criminals in suits. They coordinate in secret. They strike in the dead of night during Asian trading hours when you cannot fight back. Reuters buried this story in paragraph 17 of a commodities report nobody reads. Bloomberg mentioned it for 30 seconds before pivoting to stocks. The mainstream financial media is not stupid. They are complicit. This was not market forces. This was a calculated attack designed to shake you out before the real move begins. And it gets worse, far worse. Let me show you exactly how this scheme works, because once you see it, you cannot unsee it. Every single day, 400 million ounces of paper silver trades hands. The actual physical silver available for delivery, 28 million ounces total. 14 paper ounces for every 1 real ounce that exists. This is not a market. This is a casino where the house prints its own chips. When they want prices lower, they flood the market with fake silver during dead hours. The algorithms trigger. Stop, losses cascade, panic spreads. By the time you check your phone, silver is down $1. No news, no reason. Just manipulation. But here is what they will never tell you on TV. Industrial demand is at all-time highs. Solar panel manufacturers are scrambling for supply. Every electric vehicle needs silver, and there's not enough to go around. The Silver Institute's latest report, record industrial consumption. Again, for the 5th straight year, demand is exploding, supply is collapsing, yet prices are falling. Does that sound like a free market to you? Meanwhile, the East is playing a completely different game. China just imported 1,200 metric tons of silver in 1 quarter. That is not demand, that is hoarding. India's imports up 40%. Their people understand something we have forgotten. Central banks from Russia to Singapore are accumulating at levels not seen since the 1970s. The West plays paper games. The East buys physical metal. The West manipulates prices. The East says thank you and backs up the truck. And once you see this divergence, everything makes sense. The manipulation, the lies, the timing. They are not suppressing silver because it is worthless. They are suppressing it because they need time. Time to accumulate, time to position, before the shortage becomes impossible to hide. And here is the trap they are setting for retail investors like you. Here is what should make you furious. They are betting on your fear. They are counting on your panic. They want your silver at these prices. Look at what the data shows. While they tell you to sell, they quietly cut their short positions by 18%. 18%. While CNBC screams recession, JP Morgan's own account just bet 40,000 contracts that silver goes up. Let that hit you. They tell you to sell. They are buying. This is how they rob you. This is how they transfer your wealth to themselves. Step 1, crash prices with paper. Step 2, wait for retail panic. Step 3, buy physical at the bottom. Step 4, let it run and act innocent. They did it in 2008. They did it in 2020. They are doing it right now in 2026. But here is why their scheme is failing this time. The physical market is breaking away from the paper fiction. Dealer premiums are exploding. Try to buy silver right now. Try to buy a 100-ounce bar today. You will pay $8 to $12 over spot. That premium tells you everything you need to know. The smart money already sees this. Billionaires are not selling. Ray Dalio is buying more. Druckenmiller calls precious metals his highest conviction trade. These are not idiots. Central banks bought more gold last year than any year since 1967. Do they know something you do not? Or do they know the same thing you already know? The manipulation is real, but math is more real, and math always wins. So what should you actually do? Here's my playbook. So what do you do with this? Here is exactly what I'm doing. First, I'm not selling a single ounce. That is precisely what they want. Every ounce that leaves weak hands goes into strong hands. I refuse to be the liquidity for their accumulation. Second, I view every manufactured dip as a gift, fundamentals stronger than ever, prices artificially crushed. That is not a problem, that is a gift. Third, physical only, nothing else, not paper, not ETFs, not promises. If you do not hold it, you do not own it. When comics registered inventory hits 0, they will settle in cash at whatever price they decide. Only physical protects you when the system fails, and the system will fail. Fourth, I watch the signals they cannot fake. Comics inventory levels, dealer premiums, the spread between paper and physical prices. When these diverge significantly, the end game is approaching. Here is what to expect. More volatility, more raids, more manipulation. They are not going down without a fight. Expect more attacks. They are desperate. And desperate people do desperate things. Stay patient. Stay focused. Ignore the noise. The trajectory is already set. Nothing changes that. Industrial demand cannot be faked. Supply deficits cannot be printed. Eastern accumulation cannot be stopped. And remember why you started stacking in the first place. If you have been stacking through all of this, you already understand something most people never will. You saw through the noise when everyone called you paranoid. You bought metal when friends laughed at your stack. You trusted your research over their ridicule. That took courage. That took conviction. That took intelligence. When this manipulation ends, and it will end because math always wins, stackers will be vindicated. The same voices that mocked precious metals will be the same voices crying about missing the opportunity of a generation. They can crash the paper price. They can generate headlines. They can shake out the weak hands. But they cannot create a single ounce of silver out of thin air. They cannot print physical metal. They cannot manufacture what the market desperately needs. That is our edge. That is your edge. We see what others cannot see. We act while others hesitate. We stack while others sleep. If this opened your eyes, hit subscribe. Join the people who see clearly. Hit the bell. When the next raid happens, you will know before everyone else. Share this with someone who needs to hear the truth before it is too late. The game is rigged, but now you know the rules. Stack smart, stay sharp. I will see you next time.
Quick disclaimer. This video is for educational purposes only and is not financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Now let's dive in.